night, the world reacts to a new economic reality as Trump tariffs spread.
Hands off Greenland. That's an independent country. Hands off.
After Black Friday comes Panic Monday. Today, stock markets around the world continued in a downward spiral as the ripple effect of Donald Trump's sweeping tariff announcements triggers fears.
If you're reeling from skyrocketing gas prices and wondering why your grocery bill keeps climbing, I'm here to break down Canada's $104 billion oil shift to China and what it really means for America's future. Let's tear into the heart of this betrayal and lay it bare. For over 50 years, Canada wasn't just a supplier. They were America's energy backbone, pumping nearly 60% of our crude oil needs through a sprawling network of pipelines that stitched our economies together. Rewind to the 1970s. When OPEC squeezed the world, Canada stepped up, sending 3 million barrels a day by 1980 per the EIA's historical data. By 2023, that number had swelled to 3.9 million barrels daily, fueling everything from Detroit's auto plants to Houston's refineries. This wasn't a handshake deal, it was a lifeline, a silent vow etched in steel and crude. We saw Canada as the dependable neighbor, the uncle who'd slip you oil when the Middle East turned hostile or Russia flexed its muscles. Then, in a move that's left Washington staggering, they ripped that vow to shreds. Canada's now channeling a staggering $104 billion in oil exports to China and India, slashing U.S. supplies with ruthless efficiency. The numbers are a gut punch. 11.4 million barrels vanished from our stockpiles in just 3 weeks. A cut so savage, it sent the global energy market into convulsions. What's fueling this exodus? Greed, strategy, and a shifting world order. China and India, with their roaring industrial engines and insatiable energy hunger, are dangling prices the U.S. can't or won't match. They're not bogged down by tariff tantrums or trade spats. They're paying cash on the barrel, and Canada's pocketing it. The Trans Mountain Pipeline expansion, a $34 billion beast, is the linchpin. Once a debated dream, it's now pumping 890,000 barrels a day to Pacific ports, with 40% of that flow hitting Asia since January 2025, per the Canadian energy regulator. U.S. imports? They've nosedived from 4.5 million barrels daily in 2023 to 3.2 million by March 2025, per EIA stats. This isn't a tweak, it's a full-scale rerouting of energy arteries, and Trump's losing his mind over it. He's branded Canada a traitor, raging that they've dumped us for richer friends, and the sting's real. We've mythologized this partnership, pipelines as lifelines, oil as brotherhood, but Canada's shown it's all a transaction, not a bond. The fallout's a slow-motion car crash. Gas prices are up 17% since the pivot ignited, with the national average clawing to $4.80 a gallon by April 2025, per 8OY. Some states like California are kissing $6. That's not a statistic. It's commuters ditching road trips, truckers hiking rates 30%, per the American Trucking Association, and factories burning cash to keep lights on. Goldman Sachs is waving red flags. This oil famine could shrink the U.S. economy by 0.8% in Q2 2025, teetering us toward recession. Across the border, Canada's GDP's set to swell 1.2% per the Bank of Canada as Asian dollars flood in. They're not just redirecting oil, they're redirecting power, betting they can thrive without us. Decades of trust, think Keystone, think NAFTA, dissolved in a heartbeat. The U.S. banked on Canada's loyalty, but Ottawa's playing a new game, leaving America choking on the dust of a partnership that's now a ghost. This isn't a ripple, it's a tsunami, and it's slamming every corner of American life with unrelenting force. When Canada yanked 11.4 million barrels from our grasp, they didn't just spike gas prices. They triggered a cascading disaster that's gutting industries, strangling workers, and emptying pantries from coast to coast. Start at the pump. Crude oil futures have surged 22% since March 2025, per Bloomberg, shoving gasoline costs into orbit. The national average? $4.80 a gallon today per 8AA, but analysts warn we're barreling toward $5.50 by June if Canada keeps the tap off. That's not a hiccup, it's a sledgehammer to budgets. Truckers are jacking freight rates 30%, per the American Trucking Association, while airlines like Delta tack on $50 surcharges per ticket, per their Q1 2025 filings. Your summer flight to Florida? Add $100 round trip, if it's not canceled outright. Zoom into America's industrial core, and it's a war zone. Michigan's steel mills are on life support, with raw materials like coke now 22% costlier, a $175 per ton leap since October 2024, per the Steel Manufacturers Association. That's not abstract. It's a Ford F-150 chassis, jumping from $1,200 to $1,380 per Ford's cost breakdowns, rippling into construction and infrastructure. A bridge in Ohio? 10% pricier? A skyscraper in Chicago? Millions more. But the real kickers at the grocery store? Brace yourself. Beef's up 18%. Carrots 15%. Coffee a crippling 20%. Per USDA's April 2025 report. Why? Diesel's $5.20 a gallon, per EIA. And farmers are shelling out $1.50 extra per gallon to run harvesters, per the National Farmers Union. Add trucking hikes, and that $10 steak's now $12. That $3 coffee's $3.60. This isn't inflation sneaking in. It's a price apocalypse, and families are rationing to survive. Trump's on a warpath, bellowing that Canada's turned their back while we're drowning. He's not wrong to feel betrayed. Ottawa's not just stepping away, they're sprinting to riches. Their oil flows east, their profits balloon, and their GDP's eyeing a 1.2% boost in 2025, per the Bank of Canada, while ours stares down a 2.5% plunge, per CNBC's latest projections. The energy chokehold's brutal. States like New York, California, and Michigan are losing 30% of their hydroelectric imports from Canada, per the DOE, since January. Result? Rolling blackouts are imminent, with California's ISO warning of 10-hour outages by July, and New York utilities prepping for 20% power cuts, per Con Edison. Aviation's reeling, fuel costs are up 25% per Airlines for America, grounding 5% of domestic flights in Q1 2025. Manufacturing's buckling, 15% of small factories report production halts per the NAM, while families swap meat for lentils. Canada's not just prospering, they're watching us crumble, betting they can outlast a storm they lit the match for. This isn't a breakup, it's a full-on brawl, and both sides are throwing punches with no referee in sight. Canada's not stopping at oil, they're swinging back with a vengeance, slamming 250 to 300% tariffs on U.S. dairy products like a fortress gate crashing down. Trump's howling that it's unfair, a ripoff, but here's the dirty little secret. Those tariffs only hit after quotas are maxed out and U.S. exporters barely nudge the line. In 2024, dairy shipments to Canada scraped 10% of the quota per USDA data. Milk, cheese, yogurt, all stuck south of the border. It's a brilliant dodge. Canada shields its farmers, paints the U.S. as the bully, and keeps its hands clean. Trump's counterpunch? A threatened 100% import tax on BRICS nations, including Canada's new BFFs, China and India. This isn't a negotiation. It's a declaration of economic war, and the battlefield's getting crowded. Then there's Tesla, caught in the crossfire like a pawn in a chess game gone rogue. Canada's axed Tesla from its EV subsidy program, freezing 43 million Canadian dollars in rebates after Musk's crew blitzed 8,700 cars in one weekend. Ottawa's screaming exploitation, American greed siphoning Canadian cash, and the Trump-Musk bromance makes it personal. Is this a policy call or a political shank? Either way, it's a body blow. Tesla's Canadian sales are down 15% since January 2025, per Auto News, while Ford and Hyundai scoop up the subsidized scraps. Globally, the heat's rising. China's Xi Jinping called Canada's move a stand against U.S. arrogance at a March 2025 trade summit, and Europe's nodding along. German Chancellor Olaf Scholz dubbed it a dangerous precedent, hinting at EU retaliation. Trump's tariff threats aren't landing, they're boomeranging. Foreign investors yanked $12 billion from U.S. markets in Q1 2025, per Bloomberg, spooked by the chaos. Canada's not flinching. They're doubling down, with exports to Asia up 35% year over year, per Statistics Canada, tilting the trade balance $18 billion in their favor, per the U.S. Commerce Department. The EU's mulling $10 billion in counter tariffs on U.S. goods, per Reuters, while China's stockpiling Canadian crude, up 20% since December 2024, per the IEA, to dodge future hits. The Dow's taken a 330-point dive in a single morning, per April 2025 trading data, as markets smell blood. This isn't tit for tat. It's a global pile-on, and America's staggering under the weight. Step back, and the stakes explode into focus. This isn't just about oil. It's about the dollar's throne, and it's wobbling bad. In 2023, over 20% of global oil trades ditched the US dollar, per Swift data, a trend that snowballed into 2025. BRICS, Brazil, Russia, India, China, South Africa, now beefed up with Egypt, UAE, and Ethiopia, isn't just a club, it's a battering ram. At their October 2024 summit, they unveiled a cross-border payment system that skips the dollar cold. National currencies, gold, and blockchain tech, no greenbacks needed. Flashback to 1971. When Nixon killed the gold standard, the dollar became oil's king, cemented by Saudi deals. Now, that crown's slipping, and Canada's oil pivot is the latest shove. Why is this a gut punch? The dollar's grip, 60% of global reserves in 2023, per the IMF, keeps U.S. debt cheap and trade smooth. BRICS' move threatens that. 15% of oil trades in yuan or rupees by March 2025, per the IEA, with gold-backed digital tokens gaining steam. Canada's in deep, shipping 40% of its oil to BRICS nations, per the Canadian energy regulator, betting on a future where the dollar's a has-been. The Fed's sweating, a 15% drop in dollar demand by 2030, per IMF projections, could spike inflation 5% and jack up U.S. debt costs $500 billion annually. That's not theory. It's your mortgage, your groceries, your 401k on the chopping block. Trump's flailing, threatening 150% tariffs to scare BRICS straight, but it's backfiring. China's hoarding gold, 3,000 tons added since 2023, per the World Gold Council, while Russia's dumping treasuries, down 80% since 2018, per the U.S. Treasury. Canada's not just a bystander, they're a player, aligning with a bloc that's rewriting the rules. The U.S. trade balance? $1 trillion in the red for 2025 per Commerce Department forecasts, as dollar clout fades. This isn't a blip. It's a monetary power shift, and America's on the ropes. Tesla's the poster child for this mess, a titan caught in the grinder of national egos. Canada's subsidy snub, 43 million Canadian dollars frozen, hit after Tesla's 8,700 car weekend blitz, a move Ottawa calls market manipulation. With Musk's Trump ties, it's a political hit too. Tesla's Canadian sales tanked 15% since January 2025 per Auto News, while Ford's F-150 Lightning jumps 20% on subsidies. Europe's piling on. Since 2023, Swedish strikes and Nordic port bans have cost Tesla $1.2 billion, per Reuters, shrinking its market share from 30% to 22%, per ACA data. The U.S. auto industry's bleeding too. Trump's 25% tariffs on Mexico, set to lock in April 2, 2025 per USMCA deadlines, hike costs for parts crossing the border 8 times per car, per the Auto Alliance. A Chevy Bolt battery, up 30%, per GM estimates. Canada's winning, building an EV supply chain with Asia, up 25% in exports, per Statistics Canada. This isn't just Tesla. It's a fracturing North American alliance, with the U.S. left scrambling. If you're reeling from skyrocketing gas prices and wondering why your job feels less secure, Canada's Prime Minister Mark Carney just dropped a bombshell that ties it all together. On April 7, 2025, he stood before the nation and declared that Trump's tariffs have jacked up the odds of a U.S. recession to a near certainty, and Canada's getting dragged down with it. This isn't a hunch. It's a cold, hard warning from a man who's navigated economic storms before. Carney's not mincing words. The U.S., battered by its own trade wars, is teetering on the edge, and the shockwaves are already hammering Canada's doorstep. Carney's laying out the stakes with brutal clarity. Trump's tariffs, those sweeping levies on everything from Canadian oil to steel, aren't just pinching prices, they're strangling growth. The U.S. economy, he says, is headed for a major negative effect, with Canada caught in the blast radius. Why? Because 75% of Canada's exports, $400 billion worth, flow south. And when America sneezes, Canada catches pneumonia. On that same day, Carney huddled with Bank of Canada Governor Tiff Macklem and Finance Minister François-Philippe Champagne, scrambling to brace for the fallout. He's banking on their expertise to steer through what he calls market turmoil, with global equities already shedding $2.4 trillion in a single week, per Reuters market reports. This isn't a drill, it's a red alert. The tension's palpable. Trump's tariffs, sparked by Canada's oil pivot and fueled by his America First obsession, are shredding decades of trust. Carney's not just sounding alarms, he's pointing fingers, pinning this mess on Trump's reckless trade gambit. The U.S. might see GDP shrink 2.5% in 2025 per CNBC, while Canada's staring down a 1.5% hit, per the Bank of Canada's early forecasts. Jobs are on the chopping block. Auto workers in Ontario face 10,000 layoffs per industry insiders, while energy costs spiral. Carney's confidence in his team is steely, but the subtext screams urgency. Canada's economy, tethered to a faltering U.S., is bracing for a brutal 2025. This isn't a spat, it's a slow-motion crash, and North America's in the driver's seat. While Canada reels, Europe's not sitting idle. Trump's tariff tantrum just lit a fuse across the Atlantic. On April 7, 2025, the European Commission fired back, proposing 25% counter tariffs on a slew of U.S. goods, from diamonds to dental floss, sausages to soybeans. This isn't a polite nudge. It's a calculated gut punch aimed at Trump's protectionist crusade. The EU's not playing defense. They're hitting the U.S. where it hurts, targeting $10 billion in American exports, per their draft document. With steel and aluminum tariffs as Trump's opening salvo, Europe's response signals a trade war that's gone global, and the stakes are sky high. The details are a masterclass in retaliation. Starting May 16, 2025, diamonds, eggs, and poultry face the 25% hit, with almonds and soybeans joining the list by December 1st, per the EU's plan. Why the delay? To twist the knife, give U.S. farmers and exporters time to sweat before the full blow lands. EU Trade Chief Maros Sefcovic is keeping it cool, claiming these tariffs are less severe than the $28 billion package floated earlier. But don't be fooled. This is war by increments. Member states vote April 9th, and if it passes, U.S. producers lose $2.5 billion in profits overnight, per trade analysts. Trump's move to slap 10% baseline tariffs on all imports, with higher rates on dozens of nations, just woke a sleeping giant. The tension's electric. Europe's not just mad, they're organized, striking at America's agricultural and luxury sectors, while Canada pivots oil to Asia. The U.S. faces a $1 trillion trade deficit in 2025, per Commerce Department projections, and this EU counterstrike could shave off another 0.5% of GDP, per Goldman Sachs. Trump's betting on tariffs to reset the table, but Europe's betting on pain. German automakers like BMW warn of $1 billion in losses, per industry reports, while American soybean farmers brace for 20% price drops. This isn't a skirmish, it's a transatlantic slugfest, with the U.S. caught in a vice between Canada's oil betrayal and Europe's tariff wrath. So where does this leave us? Canada's $104 billion oil pivot isn't just a trade move, it's a declaration of independence, a middle finger to decades of U.S. reliance. Gas prices are strangling Americans, industries are buckling, and the dollar's dominance is wobbling. Trump's tariffs and bluster aren't fixing it, they're fanning the flames. The US faces a projected 3% GDP shrink in Q1 2025, per CNBC, while Canada builds a future with Asia and Europe. This isn't a skirmish, it's a tectonic shift in global power. The big question? Can Washington claw its way out before this spirals into an economic disaster? Or will Canada's betrayal mark the start of America's decline? Hit that subscribe button, drop your thoughts below, and stay tuned. This story's far from over.